Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, July 5th. Traders on Wall Street seem relatively subdued so far as they return from the long 4th of July weekend. Leading up to the holiday, the market posted its best week in nearly 2 years, with the Dow Industrials jumping 5.4%. Investor sentiment got a boost from some stronger than expected manufacturing data and Greece's move to implement new austerity measures, which succeeded in freeing up some more international aid for the struggling country. Despite that, the Greek debt crisis remains in the spotlight. Standard & Poor's said yesterday that a French proposal to roll over some of Greece's government debt would likely put the country in selective default. Fitch previously issued a similar warning. However, the Financial Times reports that the European Central Bank will keep accepting Greek debt as collateral for all loans, unless all three of the major rating agencies declare the nation in default.
Investors' attention may switch to the U.S. economy later this morning when we get a report on May factory orders. They're expected to rebound from a steep decline in April. Today's report will kick off a relatively busy week on the economic calendar. Tomorrow brings a look at the service sector from the Institute for Supply Management, as well as our first reading on the labor market in June from the payroll processing firm ADP. That will be followed by Thursday's weekly look at jobless claims, and then on Friday, it's the all-important government employment report. Economists expect that the economy added about 110,000 non-farm payrolls last month, roughly double May's extremely weak job creation. Meanwhile, the unemployment rate probably held steady at 9.1%.
In corporate news, we have an update on a takeover battle we've been telling you about in the natural gas industry. Pipeline operator Energy Transfer Equity will buy Southern Union for $8.9 billion, including more than $5 billion in cash. The total price is about $1 billion more than Energy Transfer's original bid last month, and a 42% premium above Southern Union's closing price right before that first offer. The new deal also tops a competing $8.7 billion bid from natural gas firm Williams Companies, made a couple weeks ago. The boards of both Southern Union and Energy Transfer have approved the deal. Southern Union shares are jumping 3% on the news, while Energy Transfer and Williams are set to open lower.
ExxonMobil is also likely to open in negative territory. Over the weekend, the world's biggest energy company said that it spilled crude oil into Montana's Yellowstone River. Estimates peg the size of the spill at up to 1,000 barrels or 42,000 gallons. Exxon says it doesn't yet know what caused the leak in the damaged pipeline and that it is taking steps to clean up the oil. And finally, Pfizer may run into problems with its popular anti-smoking drug. A report in a Canadian medical journal linked Chantix to a heightened risk of heart problems, including stroke and congestive heart failure. Pfizer said it stands behind the drug, citing more than 14 clinical trials involving more than 7,000 smokers. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.